contribution of MSMEs to India's economic story is undeniable. The COVID-19 pandemic has had a severe impact on India's economy, with MSMEs being the worst hit. An analysis of the latest bank credit growth data from the Reserve Bank of India shows credit offtake in the MSME sector suffered a steep year-on-year contraction of 12.7% for June 2020 alone. Now, while loans to micro and small industries shrank 7.6%, for medium-sized industries, they dipped by 9.4%. Let's go across to my colleague Ritu Singh for more.
Micro, small and medium enterprises or MSMEs are the growth engines of India's economy. To give you a sense why, with a vast network of over 6.3 crore units and a share of almost 30% in the GDP, their contribution is significant. Now, MSMEs have a 45% contribution in the manufacturing output and almost a 48% contribution when it comes to merchandise exports, and collectively they generate employment for more than 110 million Indians. But access to finance has been the big challenge for this sector, hindering the MSME growth story in India. Now, according to a World Bank report, the MSME sector in India is facing a huge credit gap of almost $380 billion. In fact, research reports suggest that only 16% of MSMEs in India are funded by the formal sector, and the remaining 84% are either underfinanced or financed through informal sources like money lenders, chit funds, friends and family, and this informal credit ends up being much more expensive than formal credit, making it very difficult for MSMEs to address the accumulated debt burden. Now, assessment of credit worthiness of such customers is often a big challenge because of financial data which is fragmented. Information asymmetry is a problem. The higher costs involved in funding these small ticket loans are some of the key reasons why formal finance to the sector remains very scarce. Now, within the formal sources of finance, if I look at only public and private sector banks, then the MSME sector, which contributes significantly to the economy, gets less than 14% of the total bank credit at about 12.5 lakh crores as of the latest RBI data, compared to over 92 lakh crores of the total bank credit in the system. Let's bring in other sources of formal finance as well, where the total credit exposure to the MSME segment stands at about 16.95 lakh crores as of June, which, as you can see, has been coming down since the start of the year. But there was a visible reduction in credit exposure, especially after the lockdown. Now, who are the big lenders to the MSMEs? Well, public sector banks naturally have been the dominant lenders, and private banks and NBFCs have been chipping away some of that share over the last few years. But that trend has changed after the lockdown and because of the credit guarantee scheme which was announced by the government. So public sector banks have once again regained market share from 49% to 51.6%. Private banks have been expanding their market share, but NBFCs have seen a sharp decline in credit outstanding to the sector, especially since the lockdown. Now, bad loans or NPAs in MSMEs have also increased for all lenders as a result of the pandemic, from about 11.4% in June last year to 12.8% now. There has been a simultaneous increase in public and private sector bank NPAs to the sector, but NBFCs have seen the sharpest rise in bad loans compared to all other lenders. Now, there have been various relief measures announced by both the government and the RBI to push credit flow to the MSME sector. For instance, a 3 lakh crore credit guarantee scheme, which has now been expanded, a 20,000 crore rupee subordinate debt for stressed MSMEs that cannot get loans elsewhere, a 50,000 crore rupee equity infusion for MSMEs through the fund of funds to help with additional equity infusion in these units, a new expanded definition of MSMEs where the government has increased the threshold limit for investment in these units, which will help them grow in size while also still availing the benefits of MSME classification, and lastly, a restructuring scheme for MSMEs with loans of up to 25 crores. Now, while all of these measures will help along the way, the problem of lack of formal credit for the MSMEs still remains a huge challenge.
Now, the key catalyst to the MSME growth story is access to finance and access to formal credit in particular. The industry remains chronically underserved. The World Bank estimates the current credit gap for Indian MSMEs is at $380 billion. In today's episode, we focus on tackling the key reasons formal credit providers are staying away from lending to the segment and how effective government measures have been in addressing this gap, keeping in mind the various policies announced recently under the Atmanirbhar package. Hello and welcome to The Making. I'm Shereen Bhan, and joining me on the program today is Shreekant Somany, Chairman CII, National MSME Council, and the CMD at Somany Ceramics. Also with us, Vaibhav Gupta, the co-founder of Udaan, and Rajat Verma, the MD and Head Commercial Banking at HSBC India. Gentlemen, many thanks for joining us. Mr. Somany, let me start by asking you, we've seen many measures being announced by the government to try and alleviate some of the pain that MSMEs were faced with, the credit guarantee scheme being the big one. What is the current situation on the ground? How much of an improvement have been seen, considering the fact that the economy now is fully in unlock mode?
Thanks, Shri. Yes, a lot of measures have been taken, but it seems that the takers of the loan also have been less. Not many of them have taken loan, and my presumption is that the value chain not being open across the sections, MSMEs have suffered, and therefore the reason to take loans have been also less. I guess as time starts, as it started opening up now, and the markets are opening up, and all the industries are opening, downstream OEMs will now start taking material. This is when we will see some more finance requirement to be taken. I'd be very glad to tell you that earlier in September, we had this a week of finance market, and we had almost about 5,000 people who had come in for loans, and 500 of them were then shortlisted. I don't know what has happened after that, but a lot of people did come. And I presume that this is an important time now where we need to make available finance to the small and medium businesses, particularly the small and the micro ones, because they are suffering. Most of them suffer because of lack of finance. So I think this is the right time to deal with this situation, as we've done in the past, and we should sort of strengthen the whole position now.
I just want to pick up on that point that you made, because the credit guarantee scheme announced by the government with the outlay of 3 lakh crore rupees, but only about 1.5 lakh or so has been utilized, and there is a pending amount which will now be used for the 26 other distressed sectors identified by the Kamath Committee. So what seems to be the issue? Is it that MSMEs, as you pointed out, didn't anticipate demand picking up and hence were not keen to take on loans, or the situation was not as bad as was anticipated, or was the scheme too complex for them to be able to deal with?
To my mind, I think it was a couple of reasons. One was that the demand hadn't started picking up. So people didn't want to take money unnecessarily and then pay interest on that. So, and MSMEs are running hand to mouth all the time. And unless there's a demand creation, they would not expand or put money into the working capital for the industry to run. And that is why I feel there were much less takers than the actual estimate that the government had probably thought of. Out of 63 million MSMEs that we have, I don't know, but I don't have a number. Less than 10% would have taken the loan.
Okay, let me ask Vaibhav. Vaibhav, Udaan has of course been working across the value chain with the small and medium enterprises since the time that you launched. What is the feedback that you're getting on the ground at this point in time in terms of revival, in terms of recovery?
Thanks, Shereen. I think we guys have actually, across the board, across geographies and categories we operate in, we generally see almost 95% of the shops open, right? So the small retail shops where Udaan works a lot, there is a lot of resiliency we have seen during the COVID period. I think our surveys have indicated for most of them, the demand is somewhere between 70 to 100% of the pre-COVID level. So people are seeing footfalls, people are seeing purchases as well. Now there are occasional disruptions, but generally everybody is open. People are seeing regular purchases, and obviously that normalcy continues to keep getting better every month. That's what we're seeing.
Okay, that's good to hear. You're saying that demand is back to almost pre-COVID levels at this point in time. But Vaibhav, since we're talking about access to finance, and that is a pain point that Mr. Somany was also bringing out, and it's been a legacy issue that this sector has had to deal with. As you look at the situation today, what's the ask? What is the pain that MSMEs are expressing when it comes to being able to access formal credit?
I think, Shireen, we at Udaan work a lot more on the trade credit, right? Which is about distribution trade, retail trade, and wholesale trade. Within that industry, one of the big challenges we have seen as we have gone through this is largely actually three challenges, right? One is cost of acquisition, because a lot of these tends to be small ticket sizes typically, loans, and the cost of acquisition becomes prohibitive with respect to process as well as just the cost. The second challenge tends to be a lot of them do not have large degree of formal trade, right?
Right.
In terms of uh, having data about their businesses very easily tracked, right? Which makes difficult for a formal credit provider to actually assess them, right? And the third challenge we have seen is obviously collections, right? If you think about channels like Kirana, still with while the digital payments are increasing, still it's heavy cash, right?
Yeah.
As you sort of think about that, right? And that increases the cost of collection for
Mm.
people, right? So you just have small ticket sizes, you have sort of lack of formal information, and then you have sort of a lot of collection costs. I think these typically have been the challenges, at least in the trade segment we have seen, which have been kind of the reason behind limited penetration of formal credit into this channel.
The important points that you've raised there, Vaibhav, let me take that across to Rajat. Rajat, some of the issues that Vaibhav spoke about could perhaps be not just an issue for the trading value chain, but could be larger issues for the entire MSME ecosystem. Now, we hear a lot of people talk about the importance of MSMEs, the need to nurture and support MSMEs, but is it just not viable for large banks, for instance, to be able to deal in the kind of way that we expect them to with this segment, given the kind of costs involved?
Right, Shireen. Shireen, I like to, kind of think of MSMEs in two very different categories. So, Mr. Somany, and you spoke about the government guarantee scheme during COVID, right? That is addressed at MSMEs who are already in the formal system, right? So you have about 10-11% as per many reports who are in the formal system, and which you can address therefore through the banking system. So my own interpretation of the government guarantee scheme is that you had about 11 lakh crores already drawn in that segment, and the government provided guarantees for another 3 lakh crores, which is actually quite substantial, given the lack of reduction in sales and turnover. I think we shouldn't have expected a different outcome, frankly. On 11 lakh crores to get 2 lakh crores, I think it's par for course. But that's one segment of MSMEs who are likely to already be reasonably well served and are likely to be less stressed because they have access to banks. But then you have the remaining 90% whose loan value is significantly smaller and who need to be accessed in a very different way. So to answer your question, can banks address that segment, or have they been addressing the segment? The answer is no, they haven't been addressing the segment because the ticket sizes are very small and you don't have the tools to access it. So ultimately, would banks want to address that segment? Yes. In fact, all the work that is being done around OCEN and around account aggregation and around GST financing, all of this is targeted towards database lending, not just trade lending, but even entity lending or other cash flow lending. So it's viable if you have the tools. And for now, we don't have the tools. But if OCEN, if that was to be successful, then yes, then you could argue that there's no real reason why a bank can't then get into scaling up their MSME lending through a tool. But to go to an MSME, trader and verify their KYC in a physical manner, that's certainly not viable.
Certainly not viable at this point in time. So, Mr. Somany, let's talk about the underserved and how do we actually give them access to finance and access to credit. As part of the CII committee that looks at the issues that MSMEs are faced with, there must have been a list of priorities that you've charted out for the government to look at, for the regulator to look at. What is the way forward in your expectation?
Shireen, we feel that educating the small and medium businesses as far as finance and how to deal with it is very important. And much of it can be dealt with as we've started doing. We've just signed an agreement with MasterCard
Mhm.
and also the NIMSE. We're having this digital Saksham program for the MSMEs, and we are targeting 300,000, over a little over 300,000 small businesses who will be handheld and taken through the understanding and educating how finance can be available, so that they can actually work through
Mm.
and for getting finance. Their systems are organized. We would like to do that immediately over 25 cities and 7 states. The 7 states have been identified. The 25 cities are being dealt with now. And I think this will give an opportunity. And we can encourage, even through our CFC that we have, the Finance Facilitation Center, where we have banks and NBFCs with us, who are basically dealing with the MSMEs for financing. We can use that channel. We can use the other channels of the banks to
Mm.
bring them forward, to loan them, so that the accessibility becomes easier.
Mm.
Uh, as Vaibhav has said, and even the other gentleman said, that the formal economy is less. That the informal economy is still very high, and
Mm.
we need to bring all that as much as possible, the informal economy, into the formal business models as well. Then
Mm.
finance would be an easier, will be the access to finance would be easier.
Right. Vaibhav, on that point about formalization of the economy, improving access points is going to be one. The use of technology, perhaps, to be able to deal with some of the pain points that both you and Rajat spoke of. Take me through what you've been able to do at Udaan using technology, leveraging the power of that to be able to give out loans, to be able to do the kind of trade financing that you're doing.
Sure, and I think I completely agree with Mr. Somany, right? I think even at Udaan, a lot of the biggest investment we have done in past 4 years is education,
Mm.
right? And it'll kind of lead into your question, Shireen, is over past 4 years, we have gone through across the breadth of this country in terms of cities, sub tier two, tier three markets, rural areas, right? And educating a lot of retail traders who run shops, chemist shops, restaurants, hardware shops, to use Udaan as a platform for their sourcing, for their purchasing. That has been a lot of education and habit changing.
Mm.
Now, what that does, Shirin, is uh, as you get trade working on the platform, it generates a lot of data about the trade, which was earlier not visible in a formal economy. Right now, we have on Udaan 3 million registered users. Every year, we do about 50 million orders.
Mm.
Right from and what that does, it brings a lot of data about a buyer, about a seller, in
Yeah.
terms of which buyers are at what at what frequency they're buying, what products they're buying. For sellers, it brings in data about what is the quality of their product, repeatness of their customer,
Yeah.
competitiveness of the seller, right? All of that data, which was in the trade data,
Mm.
Udaan platforms bring on top of that, right?
Mm.
And in addition to that, there is high amount of liquidity on the platform because buying and selling is a constant activity
Yeah.
for most of these. So you have a highly liquid, very transactional platform which generates a lot of engagement and data, which is data is relevant about the business, right?
Mm.
Now we use that data to actually figure out algorithms with respect to underwriting,
Mm.
right? And because you have a constantly increasing data set, your
Mm.
ability to test those algorithms increase. So you keep testing them and revising them, testing them and revising them. I
Right.
think the idea of commerce platform generating trade data
Mm.
about businesses has been the most powerful sort of lever for us in terms of how we have gone about creating sort of trade financing for both our sellers and both our buyers. And I think that has been one of our biggest ability to be able to find, underwrite the people in absence of their formal data. And obviously the platform solves for the two other problem we had of cost of acquisition and collection in
Mm.
that context, because you just have a regular relationship with the
Sure.
with the business, so your collection costs are lower and your acquisition costs are lower. So I think that synergy of the platform has been core for us.
Yes, I would imagine. And as you pointed out, it's the commerce data that you're generating on the platform that is then being able to feed into the trade finance aspect. But Rajat, some of the constraints, even the not just the underserved or getting served, but even the access to formal credit for those who are already in the net. What are some of the constraints, to do with collateral, for instance, underwriting, equity base? What do you see as some of the key impediments?
I think the first impediment really is the lending to an MSME in a branch setup, in a, let's say, a public sector setup or a private sector bank setup. You're always competing with other asset categories. You're competing with retail loans, which have been growing at 18 or 19%. You're competing with wholesale loans, which are easy kills, if you like. So it's an asset class where you're not, it's not the, let's say, the Weber's model or the udaan model, where there's a trade setup and you're really focusing on everything within the trade setup. So I think a competition for capital is a reality for MSMEs. The other issue is really around collateral, because the traditional model in India has been that, okay, you take a certain LTV and then you lend on the basis of that collateral, because often the paperwork for MSMEs was not substantial enough for the quantum of lending that they wanted. So that, I think, is probably the biggest constraint, because if we continue to be collateral-based lending, then we do realize that recovery from collateral-based is very difficult, but equally you can't scale up the lending,
Right.
Because an MSME is never really going to have the collateral to substantiate the amount of loans that they want. So what's the way around it? The way around this is data. And the way around this is to match your financing to the credit cycle or to the trade cycle or to other data that you can pick up. So there's really, I can't see a different answer to 50 million MSMEs to be served by the banking segment, other than to use a very different channel than the traditional channel that we've been using.
So, speaking of alternatives and not depending on the traditional channel, which clearly doesn't seem to have the risk appetite or, in fact, the bandwidth to be able to deal with this. So, Mr. Somany, we're now talking about different kinds of financial institutions who could perhaps emerge as specific players, specialized players who address the needs of this particular segment. Do you believe that that is the way forward, that that's an ecosystem that needs to be nurtured much more through government intervention, through regulatory support, to be able to cater to this class of borrowers?
I think you're right, and even Weber's very right. We can't judge an MSME in terms of rating. I mean, if you have the same yardstick of rating before you give a loan, it'll never happen. So either you have a different set of rating for MSMEs, because as you've rightly said, the collaterals are not going to match the kind of loans that they require. So I think it has to be based on collaterals plus the trade volume that they create. That should be a yardstick for how much loan can be given, which could be an escalating loan or a loan which is a dynamic loan that continues through the year, rather than a fixed amount, so that they're not strapped with finance. And NBFCs can do a good job with it as far as this is concerned.
Yes, that could be perhaps the way forward in trying to provide access to finance. But Vaibhav, let's flesh out the technology aspect a little bit more, because that is something that Rajat was talking about as well as being perhaps the most efficient solution to try and address this pain. Take me through what you've been able to do at Udaan with the kind of tools that you've used on AI, ML, etc., to be able to solve for this problem.
Yeah, I think, Shereen, it's obviously a work in progress, right? I think very simply, it starts with you creating a product which seamlessly gets into the existing behavior of businesses, be it a sort of manufacturer or be it a trader. Like, they have a general behavior how they do buy and sell, right? You need to create products which are very intuitive, very simple, go into their existing behaviors. And that's how initial Udaan app was, in terms of a buyer can just log in, gets an OTP and starts buying. A seller can just list his products, take photos, start selling, right? And then the platform has to be the trust maker for people to actually depend on, because their existing relationship were based on trust. Now the platform comes in as a trust maker and gives them that trust that if you sell on the platform, your payments are secure. If you buy on the platform, if the products are not good, the platform will help, right? I think you have to go through existing behaviors of people with very simple products. What that does is it drives a lot of adoption and a lot of engagement. And when you start making a difference to people's business, they are far more open to change. That's what that we have seen, right? And we have gone increasingly more requirements to our buyers in terms of documentation, asking them, as we start them with, like in this context, when people start buying on Udaan, they typically start on cash. Then after they've done few transactions, our algorithm will pick a certain set of buyers and offer them a credit line and say that your next orders are. So it's a very continuous self-evolving algorithm which looks and based on the behavior gives them a certain credit line. Their behavior continues on the platform, they give increase the credit line.
Good.
And then we go into asking them more documentation as we go more deeper with them, right? So I think the technology platform fundamentally enables a very granular underwriting and sort of evolving based on just at a transaction level. You can treat one buyer sitting in same shop, same street in Mysore, and the other buyer differently based on their behaviors, right? So I think it starts with simple platform which generates a lot of engagement, and then you start creating very simple products,
Yeah.
low effort products to sort of gain penetration and then sort of grow with the changing the behavior. That has been sort of our learning, Shri.
Yes, and I let me ask Rajat that. Rajat, low effort, simple products. So, do you believe that there is going to have to be much more of an aggressive mindset change for the financial services industry to be able to cater to the needs of this segment? And are we on the cusp of seeing that change?
I think we need a change for sure in the way that we think about MSMEs. There's no doubt in my mind about that. There's this statement that I often hear that in India, bad debts are a large problem, but it's the large guys who are the large problem, right? They're the ones who've created this 12, 13, 14%, whatever, 10%, whatever it is. The reality is MSMEs have a restructuring default rate of 12%. It's not low. So the traditional models have their benefits as well, because you're able to reach out across the country. But you do need to evolve this, because anything that has NPAs of anything more than a few percent is unlikely to grow to scale. So both in the interest of business growth and in the interest of MSMEs, you need the banks to come up with models which complement and maybe even take over from the existing models. There's little debate in my mind around that, and we are at the cusp of that. To the second part of your question now, how do banks adopt it? How do they work with newer age companies and fintechs, etc.? Weber spoke about trust. Banks have the trust of their customers as well, right? They've been banking with these clients for a very long time, and the relationship perhaps goes beyond just the lending side, right? There's a transactional banking relationship. People feel safe that their money is kept in that bank, and that there is so there is an element of trust that banks have built. And while you're getting a lot of new fintechs and companies coming in and aiding accelerating the process of assessing credit, of the algorithms that are built in to access credit in a wider way, there's no reason why banks can't adopt to that and add it on top of the layer of trust that they have built over the decades. It just, to me, not every bank will do it to the same degree. But to me, that's the model, that the banks already have the customers and they have the trust. Now they need to adapt to a different way of working, and that could be the solution.
Okay, well, let's see if we do. You believe that we're on the cusp of that shift. Let's see if we, in fact, do make that shift. But Mr. Somany, let me ask you about the opportunities for growth now, beyond, of course, the access to credit. At this point in time, the focus is on vocal for local, domestic manufacturing, and so on and so forth. In light of the measures that have been announced, whether it's PLI or the need to hike import duties to try and give domestic manufacturing a boost, how are MSMEs reading the changes? Are they prepared? Are these really big opportunities? Could these emerge as game changers for this segment?
Shereen, I believe that as an individual. So I can't put it into numbers where it's not available. But as far as I'm concerned, I'm optimistic to the view that here is an opportunity for India. Now we have to play the game properly. I mean, that starts with the education and the technical know-how and advancements in the MSMEs. Two, we need to create these models of excellence as far as our service and quality is concerned, the product quality, etc. And I think this, if we are able to do and choose such low-hanging products specifically now, which can actually replace a lot of market, I think this is an opportunity which will never come again. It's a golden opportunity and we should grab it. And I see a bright future for MSMEs who look forward into this. There are many MSMEs who are willing to go into that game-changing situation, and
Well,
we need to work. But quite honestly, if you ask me, I think
yeah.
we couldn't have had a better opportunity as what we're having today.
Okay, good opportunity that is open for use. But Vaibhav, let me ask you about how life has been during the pandemic for the business, and more importantly, the lessons learned, and any structural shifts at all, in case you intend to make them post this.
Means I think, as you can imagine, it's been nobody can predict. Like it's been obviously, if I look back, a year with a lot of learning. I think we guys are lucky ones where there is a strong tailwind of digital and internet behind us. So definitely the optimism of sort of future is very high internally, but obviously navigating all the disruption has been a lot of learning for us. As we look forward, I think. My sense is when we started Udaan, we were thinking mobile internet is going to open up this country. I think that's just has become real, and COVID has made a step shift to that. If there was any delta over there, and I think internet platforms, I believe, like ours and others, have a huge opportunity in this country, given where the country is in the stage of the growth of the economy and society, to really leverage the internet to drive a lot of value creation. Right? We have we are today about 3 million registered users or more in Udaan, but there are 100 million farmers, there are another 25-30 million traders, there are 15-20 million manufacturers. You have so much of penetration available, so there is high amount of optimism about sort of future. And I think one of the things I believe, and it goes to a little bit of what Rajat was saying, I think a lot of value in India can be created if internet platforms work in the context of, let's say, financing, works with a lot of financial institutions, right? Because the platforms have ability to bring the puzzle of data, the puzzle of intelligence, or the lower transactional cost. And if you can leverage the capabilities of sort of providers in parallel, right, I think you can create a lot of impact for the country in a very sustainable manner, rather than in a sort of in a more excitable manner, more sustainable manner. So I do believe I think I share a lot of optimism of where we are and where we're going.
So, Rajat, let me end then by asking you, are we going to see this marriage, this union, this coming together of providers like yourselves and internet platform players like Udaan?
Undoubtedly, maybe about a decade or in the past, there's always this thing: are fintechs going to take over from banks? All over the world, that was a discussion in many forums, and I think you would find that if that is discussed today, invariably across the world, across panels, the talk is more about how fintechs and banks can work, or fintechs and other financial institutions can work together. So there's absolutely no doubt in my mind, Shereen, that sure, I mean, some of the platforms, etc., will become financial institutions of in their own right, and they have data which is tremendous. But this is not a market which will crowd out people who have the right will and the right attitude towards technology. So this is a market which will grow for everybody, and therefore I think the much greater theme is going to be the theme of collaboration between people who use brain power and banks and financial institutions who have the trust of clients and who have the capital to further that agenda. So I don't. It's not an either or for me at all.
So, Mrs. Somany, I'll give you the final say. This union, this coming together, as we've just sort of demonstrated on this program, does that give you the most hope as far as MSME financing is concerned going forward?
Shireen, it's looking very beautiful. But I have to say something. When we talk of finance, when we talk of lending, we always measure it on the appetite of taking risk.
Yeah.
Now, I think the whole thing needs to change as far as MSME is concerned, but the appetite of trust. I think that is important. With a caveat, of course, that data is available and transparency, certain standards of data and transparency is there, and the appetite of trust has to be done. This is the most important. In the olden days, you had trust banking. I think that has gone because of the so many NPAs that we've had. But I think slowly and steadily, we've seen that MSMEs have a much less NPA. Of course, Rajat says 12%. I didn't know about this. But we have to study what are these 12%. But most of the MSMEs are quite, afraid of loans, and they're good people. So I think the appetite of trust has to increase a little bit also, and things are going to be very nice.
All right, so it's a beautiful picture that has been painted on the program with plenty that's going for this sector at this point in time. But of course, as we know, it's imperative that all of this comes together at the right time, so that the MSMEs in India can truly benefit and profit from this coming together and this union. Vaibhav, Mrs. Somany, Rajat, always a pleasure. Many thanks for joining us here on CNBC TV 18. Thanks for sharing your stories as well as your insights. Appreciate your time. Well, that's it then on this episode of The Making. Do stay tuned. We have a lot more coming up for you. But for now, from all of us here on the team, goodbye. Many thanks for watching.